All right, let's get started then. If it's super beautiful, perfect, just like you guys, then we should be good to go. All right, so I'm going to switch here into the slides. I want to start out by presenting to you guys three scenarios that I think could have impact on the stock market and where we could go from here. All right, so first and foremost, thank you guys for tuning in. And thank you for being patient through this technological challenges. I'll clip the beginning part out, and we'll start here for YouTube and watching the replay. So welcome aboard. All right, so I wanted to go in and take you through these scenarios very quickly before I open it up for questions. If you've asked questions at this point, I'm really sorry. You may have to retype them. We're going to start the Q&A period in a moment. First, I want to tell you a little bit about the three scenarios I see playing out with this corona situation. All right, and there's three of them. There's an optimistic, neutral, and a pessimistic scenario that we're anticipating here. And then based on these is how we're going to play the stock market on a go-forward basis. And we're going to look for some economic touch points as well to alert us which one are we slipping into. At the moment, we're kind of going with the neutral scenario, and I'll explain that to you in a second. All right, as I go through this, I'm not going to be able to see the questions. I do apologize, but we're going to save the Q&A at the very end, working off of one tiny monitor. You guys can probably not see it actually because actually, can you? Let me see. Maybe you can see my face at the same time. Yeah, you can. All right, and I won't be able to see the Q&A, but I will answer all of them at the end. So what's the optimistic scenario? By the way, this entire presentation has been condensed to be 10 minutes or so. For the elite members in our membership, we have an entire hour-long webinar that spells it out in a little bit more detail with a little bit more information. But I wanted to condense it here and still give you the important info. The optimistic scenario is this: that this coronavirus pandemic gets contained within the next 4 weeks. Okay, so this is a week ago, so at a week time frame. Within the next 5 weeks, all right, miraculously, we go in here and there's less cases. All right, people self-isolate. There are no more. The rate of spreading cases decreases, and we kind of get a grip on this. All right, the infections growth rate dramatically decreases as well. So day over day, we're getting a lower rate of infections, and it tapers off, almost like what it looks like in Wuhan right now. If you're to believe the data, it peaked, and it's kind of been consistent since. Yesterday was the first day they reported no new infections, all right, or no new spreads of the virus, no new cases, all right. A super optimistic scenario would be if a vaccine becomes available literally right now, right, in the next little bit. If a company comes through and comes out with a vaccine, this corona pandemic is essentially handled. Then what we can do is go out there and all get it. All right, there's the herd immunity mentality. Well, if we go in and get it, 60% of the population gets it, and there's a vaccine ready for the people who does turn severe to, then it's handled. It's under wraps. That though is going to take a year plus of clinical trials just for an approval process, just so it turns out to be effective. So obviously that becomes less of a likelihood, in even an optimistic scenario. The next thing is businesses reopen within 2 weeks. Right now, what's really killing the market is the profitability and the fact that the economy is taking a big hit. Right? If everyone's at home, they're not doing as much shopping. Right? Grocery stores, companies like Zoom, right, that do telecommunications will thrive, but we need to see the majority of businesses reopening. Sadly, in the last couple of days, that hasn't been the case. It's going the opposite way. All right. Travel restrictions get lifted, so it allows the free flow of goods and people once again. And what we would see in that scenario is in Q1, we would see a pullback in business productivity. That's inevitable, all right? This is Q1 at the moment. So we're going to see less activity, less profitability, and a severe pullback in GDP in the first quarter, regardless of what happens. Optimistic, neutral, or pessimistic, all right? Because we're dealing with it at the moment. The second quarter GDP starts to recover, begins to bounce back a little bit, and it's sluggish, but it does start to have a positive incline. So we're getting a bullish or an upward slope to GDP once again, and then we get a strong recovery and boom to follow. All right, we get kind of a V-shaped bottom and bounce back up. Here's what it would look like in a situation where that happened with the coronavirus. We get it under control. There's a vaccine, and we stop the spread. And there's an end in sight. Businesses start reopening. Then that would suggest that the stock market low is currently in. It should not go any lower under this optimistic scenario, because then you'll see stocks starting to stabilize in the second quarter and then rally for the rest of 2020. All right. I think under this scenario, technology stocks lead the way and retail will lag. Retail will take longer to get back on their legs, resume the profitability, rehire people that they may have laid off. Retail will take longer to get back on the horse and get back on the upside. All right, that's just factual. So under this scenario, technology stocks in the tech sector will lead the way to the upside in the optimistic scenario. All right, bonds and gold will consolidate as fear would still be higher in the marketplace. There'll still be some bids and purchases of bonds, gold, etc. But the stock market will also be moving upwards. So there'll be a flow of cash back into the markets. All right, and this is what I've kind of shaped or sloped the recovery like. Let me turn off this camera for you guys because for the slide component, you really don't need to see my face. And some of you might want to, but then you're here for the wrong reason. You saw my wife, right? Just kidding. But let's get back into this piece. This is what I see the economic or the stock market recovery looking like. All right, even if the bottom goes slightly lower, I project that from this, even if we have a V bottom low, under the most optimistic scenario, we don't hit new all-time highs till April of next year, a year from now. All right, I think the recovery will be slower and it'll be more in line with the economic outlook than it has been in the past. Because if you think about what's driven the market since about 08, 09, number one is the Federal Reserve, and then number two is corporate buybacks. Companies now are buying back less of their shares because they need more cash, and banks are leading the charge with this trend. All right, so what this means is stock markets will go up, but they'll go up at a much slower pace than we've experienced in the last decade. And if you look at it, you'll ask, well, how come? What information leads you on the basis of this recovery? First of all, this is a pretty aggressive recovery that took place. This is 2019. These red bars that are projected, I can't move. I can't draw in here because the drawing is not showing on OBS because it's a horrendous piece of software. But other than that, if you look at the mouse, you could see this rally is projected from what 2019 looked like. So I copy that because to me that's an aggressive run up. So under the most aggressive scenarios, it still takes us a year to get back to positive to new all-time highs in the stock market. All right, so it's a projection of real price action, and it's led by a slower growth rate in markets. The reason I say that is because I think the stock market has weaned itself off the Fed. Right, when the Fed cut 50 basis points and the stock market drops 100 points on the ES the next day, or the S&P 500, all right, that there's an indication that even the Federal Reserve is losing grip and its power of circulating free money and maintaining stock market gains. And as we lose that edge, as the potency of that tool is lost, the market will start to move more in line with the economy. And the last 10 years, it hasn't done that. The last 10 years, there's been a much bigger gap in the stock market than what the economy has done. Markets are up 400% since 09. The economy is not. All right, by any stretch of the imagination, the economy is not running up to 400% from the 09 low. In fact, it's been kind of huffing and puffing, but maintaining pace. All right. So what we're seeing here is not a huge crash in stock markets that's unrealistic. This crash that's happening is giving up some of these Fed gains and correcting back down to where it should have been to begin with. So you're seeing more of a loss of confidence in the Fed than anything else and this free money. All right, but that's going to take us about a year under the most optimistic scenario. So what's the neutral scenario? This is where I think we are at the moment. All right, we're under the neutral scenario. This corona pandemic has some signs of being contained in the next 4 weeks. And what I mean by contained is people doing what New York is doing, all right? Lockdown in New York, lockdown in California. Here in Toronto, people are walking on sidewalks still, but there's very few of them, right? Very few cars, very little traffic. Businesses are closed still. People are like 6 feet away from one another. And, there are measures being taken to contain the spread of this, but we still don't know what's going to happen. It might increase still for the next 4 weeks. For the next 4 to 6 weeks, if we manage to contain this thing, I think the neutral scenario has the opportunity to take shape in the market. I think this is the one we're on track for. All right. What we want to see here very soon, next 1 or 2 weeks, is infection rates starting to decline, right, on a daily basis. It's not about having 0 people get coronavirus tomorrow versus today. The important part is the growth rate declining and less people than the prior day getting it, suggesting that this isolation is working. All right, that's what we would want to see. We want to see travel restrictions not increased but removed. That's a typo. So we want to see travel restrictions get decreased or lifted on a light basis. All right, non-essential businesses are closed, but essential businesses remain operational. Obviously, you don't want to close grocery stores, gas stations, all right, governments, hospitals. Those are things that need to work. Mortality rates stabilize. We're still at the very early stages of knowing how this virus is going to make its way through the western part of the world. Right? We don't know because in the U.S., very few people have had cases that have either been, obviously you've recovered from it or passed away. There's the cases that have been closed, if you will, or resolved have led in a very high mortality rate. That's worrying, and we need to see that stabilize. And I think the next 2 to 3 weeks is critical in this market's path on how we've responded, how the virus morphs, and what it does from here going forward. All right, under the neutral scenario, you're going to see a Q1 slump in economic activity. Q2 GDP and economy will continue to slump, but they will eventually bottom out in second quarter. All right, which means if you think about it, January, February, March is Q1, April, May, June, end of the summer. We're close to the end of June, rather, and midway through the summer months with the warmer weather, the economy bottoms out, businesses start to reopen. All right, there's the containment efforts are working, and we get out of isolation. That's the neutral scenario. That's where I think we are now. Right? I don't think that this thing turns around and gets any kind of resolution before June. So these isolation things you're hearing about, yeah, 2, 3 weeks in quarantine. I think we're in for months of this if we're going to contain it. All right, and Q3 we start to slowly recover, but we do a soft landing. We don't go into hard recession, and then we return to full capacity in business and the economy in 12 months. Under that scenario, the low is close, like we're close to the low, but there could be some more downside. All right, stocks will begin to stabilize in the second quarter. We could still see more downside in the next couple weeks, and then slowly move higher from there. All right, and another market top or another market all-time high could take years to reach. All right, here's the projection. In fact, under this projection, we'd be trading in 2025, and we're still at 3,000. We haven't even scratched the surface or getting our way up to a new all-time high. Remember, this is a new normal. This is a new normal in a sense that the economy and the market are moving closer together. It's more sustainable, which means it's slower moving to the upside. All right, what really matters is earnings growth, companies making money, going back to the basics, not giving companies who are in the business of elevating the human consciousness by doing real estate, right? Because they're not in the business of elevating human consciousness. You're in the business of co-leasing real estate or subleasing real estate. And so giving companies that are normally called unicorns fair valuations based on making money, not just having a market saying I have 6 billion people that I could reach. How much profit you made? Minus 700 million. In 2019 terms, that was fantastic. I think in 2020, we're hitting a new normal where investors are going to expect to see profitability before companies even go IPO and are listed on the market. Right? Under this context, the stock market will continue to rally, all right, after we bottom out from Corona, but at a much, much slower rate, all right, which is a good thing. We're going to stabilize and tie our boat onto the economy more so than giving crazy valuations to companies who are even pre-profit. They're coming in with massive losses, IPOing, and people are jacking up the share price 2, 3, 400% before they've even made a dollar of actual profit. Right? There's a term in entrepreneurship called ramen profitability, and that means the amount of money your company has to make for you to eat ramen noodles. And we're seeing these companies go public worth billions of dollars before that's even happened. All right, think about that. And I think there's a new normal where that sort of doesn't fly as well. Right, it's going to take longer. That's the neutral scenario. The pessimistic scenario, knock on wood, it's a wood table, doesn't happen. This gets really ugly, is corona pandemic is not contained. All right, infections continue to grow at increasing rates. 40% of the population gets infected, 3.12 billion people. Close to 100 million people die at a 3% rate. Some doctors are even saying 70, 80% infection rate if we don't contain this. So at some point, everyone's going to get it. The normal influenza, normal flu season, one person affects 1.3 on average. Coronavirus, it's 2.6. Every one person will infect nearly 3 people. And so if we don't contain this, it balloons out of control. Can't stop it. The vaccine won't come out for a year, and it gets really ugly really fast. We're looking at 100 million people plus dying in this scenario. Right? The economic and the healthcare system get overloaded. They can't service everyone. Businesses shut down. A lot of them go outright bankrupt. All right, the businesses that are renting office space from the landlords, they don't have the cash flow to pay it. They go bankrupt. Markets crash, real estate drops, and we just go into, mass layoff of people. It gets really ugly. All right, credit dries up, stock markets crash, real estate takes a dive because no one has the profit, the income to pay their real estate bills, to pay anything else but the essentials. All right, this is where Q2, Q3, and Q4 slip into negative territory. That we go into a recession, and big government assistance will be needed. Right now, the United States has announced a stimulus package that's equivalent to 10% of GDP. All right, but that won't be enough. And I think the closer we get to this pessimistic scenario, the more you're going to see bazookas getting fired with free money, assistance programs, all right, subsidies, mortgage deferral payments, all types of programs in response to trying to contain this thing. But if the coronavirus itself is not contained, it's going to continue to cause havoc in the economic front. All right, businesses will lose employees, they'll lose profitability, they'll collapse, credit dries up. It could even bring down companies. We could be looking at Lehman Brothers type scenarios. If you guys remember, if you traded long enough, you've been around the financial world long enough, you remember what Lehman Brothers is, right? The company literally went bankrupt because they didn't have cash flow, right? That would cause massive pandemic. And I don't want to fear monger. I don't think this scenario will happen. I think we'll pull through. But under the pessimistic scenario, depression like 1929 is likely to happen if we go under this route. All right, under that condition, we're just getting started. Stock market's not going to stop here. We have another 20 to 30% to go at least to the downside. We'll bottom out by 2022 to 23. All right, in this scenario, bonds go up, yields go negative, gold prices skyrocket with the U.S. dollar. All right, and government's going to have to step in big. And the question is going to be, well, how will they pay for this stepping up big? What kind of return would they have to get in order to make these loans? The debt levels are around $24 trillion for the U.S. So where will the money come from globally if nobody's purchasing these bonds? It would have to be from the Treasury. They'd have to print money, buy some more of their bonds, monetize some of the debt, and it just creates even more trouble. All right, it creates massive inflation consequences. So looking at that scenario, I have on this chart a downside target of the S&P under 1800, somewhere around 1790. We could even get to around 1650. That would mark the average recession drawdown of 50%, which would get us around 1700 on the S&P. It sounds nuts, and we could get there. Another thing that sounds nuts is something like this, being down 30%. We're officially down the most amount in the stock market at the quickest pace and the fastest and shortest amount of time since any drop ever in history. All right, 1929, 1987, all right, the Black Monday, 92, 01. Any recession before, the market currently is dropping at a faster pace than that. So in a way, this is historic and unprecedented. All right, here's what Goldman Sachs thinks. All right, they're kind of screaming bear, but they're also relatively neutral. They had a call with 1,500 clients last week. Goldman Sachs gets it wrong very often, but here's what they thought. They said 50% of Americans are going to get this virus. It's very communicable. 70% of Germany will get it, 58 million people. That's important because Germany manufactures a lot of stuff. All right, peak virus is expected over the next 8 weeks, declining thereafter, so 7 weeks from now. All right, it appears to be concentrated in a band between 30 to 50 degrees north latitude, meaning that like the common cold and flu, it prefers colder weather. So as we pull into this warmer climate, we don't really know. Doctors don't know. Scientists don't know. So how the hell am I supposed to know? But I'll tell you this. If we do transition to a warmer season and we start to sort of see these rates decline, all right, mortalities decline, this could be a savior to us. But then the next question is what happens next season, right? Will there be another strand of this thing? So there's a lot of unknowns at this point, all right? Different methods being approached by different countries, and I'll let you guys read this. The one thing they said is they don't think there's a systemic risk. Governments are intervening and markets stabilize them. Private banking sector is very well capitalized. They said it feels more like 9/11 than it does like 2008. Rather than a systemic collapse, Goldman Sachs thinks this is more like an event-driven sell-off. All right, here's some considerations you got to make. 2020 elections are going to be huge. They have big implications for the market. All right, the stock market Fed dependence is over. I don't think stocks are now looking at the Federal Reserve anymore as much to assist them. And these assistances that are being dropped in, you're getting now money market security support. You're getting QE4 and 5. We're on QE5 at the moment. You're getting $500 billion overnight repos to flood banking systems with the cash liquidity they need. A lot of talk in the professional desk is that a lot of big banks, the primary dealers of the Fed, were very close to going bankrupt in September. So they needed to inject that money to make the balance sheet whole. All right, that happened before the Corona situation. So Corona is not causing the market to tank. This COVID-19 thing isn't the reason the market is dropping, but it is a symptom of it. All right, it was sort of the ignition. There was a lot of dynamite in a room ready to to cause the sell-off, but coronavirus is the match to flick it and set it all off. All right. Think about this: if businesses had the liquidity, if there wasn't as much leverage, a business should be able to survive 2 to 3 months. Think about financial planning advice, right? A lot of people say, hey, you should have 3 months worth of emergency settings. We're 2, 3 weeks into this where businesses are closing and they're declaring bankruptcy, right? So there's got to be a cash flow for these businesses to be able to survive a little bit longer than a couple of weeks. That's what's worrying to me, is that there wasn't that liquidity. Uh, as a business owner myself, as a trader, I have liquidity. If this thing goes for many months at a time, a couple of years, then there's going to be problems, obviously, right? We also bought some good real estate at a pretty penny, pretty much right before this happened. And so I'm part of it as well. I'm not out here saying I'm genius. I also got caught a little bit sidelined by this. But the question is, how do we respond and what happens from here? These are the three scenarios I'm laying out. All right. Like I said, these unicorn companies are going to see slower valuation increases and appreciation. They're going to have to start showing some profitability before they're viable enough to go IPO. All right. Stable business and real assets, so we'll see a faster rate of valuation. Companies who do real things, who make things that if you drop on your foot will hurt. It's a Dennis Gartman quote. They're going to see some of the more inflow of money and the benefactors of growth from here forward, no matter what happens. Right? This has spooked a lot of people, and a company like WeWork may just go down as the last company that tried to go IPO that failed on a massive scale. Right? A lot of companies before that went IPO with not a single dollar of profit. All right, and shareholders turned a blind eye to it because they're saying there's growth. They have a market. So many millions and billions of people are tapped into their platform. It's a technology business. It's not a taxi business. All right, it's a technology business. It's not a hotel business. But all of that at one point, when you think about it, if you pull the power cable, where's the value in all that? It all evaporates. I think there's going to be a reshift to evaluating business value based on profitability, right? Is the model profitable rather than wait for it to get profitable before you even invest? I mean, we'll wait for it to be profitable before invest rather than putting our money in on the hope that growth will eventually lead to profit. Scale. If we get enough scale, we'll break even. Right? I don't think that's going to fly in the new normal. All right. Oil price war is going to cause a lot of future volatility. I mean, look at oil. Today not today, but last week we're down in the low 20s. And I'll tell you one thing, there's going to be a lot of opportunity for us as traders. But I also need you guys to be humble. Our trading room is doing incredibly well, right? But I need you guys to be humble in these days because I remember what it's like in '08 when I was on the trading desk taking phone calls and listening to people get hurt. All right, so this isn't the time to go out there and be cocky about this. This is the time to offer people emotional support. All right, be there with one another, send each other love, joy, happiness. But on the market, you have to short. You have to make your money wherever it is. That's our job, right? We can't turn a blind eye to our job, but at the same time, be cognizant of what you're doing here. All right, and there's going to be a ton of opportunity for us no matter what happens with this. Under the pessimistic scenario, we'll stay at home, we'll trade, we'll make good money, we'll be quarantined. All right, it's going to be painful. We'll get through it, and we'll get through that period with more money than we started it. However, think about the damage it'll do to society. All right, so these are things you got to remember. There's all trade-offs. So to me, I'm hoping that we don't get the bearish scenario or the pessimistic one. All right, you got to pay attention to proposed fiscal and monetary policies from here forward. How do you know which one of these scenarios we're moving to? Number one is going to be look at the coronavirus numbers, look at the spreading, and look at the economic impact as well. In the next couple of weeks, we're going to start to see earnings come out for Q1. Let's see how company earnings are doing. We're also going to look at some economic indicators, advanced and preliminary GDP. All right, we're going to look at inflation, look at consumer spending. These are things that are going to matter in the next couple of weeks. You got to pay super close attention to the Fed, monetary fiscal policies, corona developments. All right, look at credit markets. Right now, you should be looking very closely at bonds, bank liquidity, looking at repos. How subscribed are they? All right, are they undersubscribed, oversubscribed? How much liquidity is being added? All right, banks not doing buybacks anymore is a direct way of them telling you they don't have enough cash to do it. And so you got to really be you're going to have an opportunity to make a lot more money in this kind of market condition, but you're going to have to do a lot more work. Right? You're going to have to be a lot more glued to the screen, reading news events. You could ask my wife, Reese, before I go to bed, usually what I do is I read through some last articles. I'm constantly glued. You got to look at this thing. This is when the job gets hard. All right. When markets are going up and you could pick any four letters from your middle names and your friends' names and the food you love, and those four letters, you could buy that stock and make money. There's a saying in the business, don't confuse bulls for brains. Markets are going up. Everyone makes money. All right. You just have to wait it out. Now's the real test. And this is where traders are going to step up and do the job, but it's going to take more workload. Don't think that this is something you just do on the side for fun. You're going to have to commit to it more than ever in today's day and age. All right, watch your economic indicators. Mention all this. We're at a big decision moment. All right, there's a reset coming at some point in the economy and the markets. Hopefully, this isn't the one. I think we pull through. So for me, the scenario that I think is most viable is a neutral one. I think this is going to get a little worse before it starts to get better. I think markets have another 10% or so to the downside, 5 to 10. All right, I don't think the low's in. I think we sweep these lows, run it back up, and then we have a slow recovery from there. All right, as the summer months come up and we heat up in the economy, or rather in the weather, hopefully, the coronavirus numbers tail off as well, and we have a chance here to recover. But no matter what happens, brace yourself for a slower recovery in the stock markets. I don't think we run up and hit new all-time highs in weeks. I could be wrong. All right, you get 100% wrong, but I'll tell you what, if it starts to turn to the upside, we're going to be getting long anyways. And so the faster it goes, the better. But at this moment, we got to stay vigilant, read the info, be up to date, and I'm tracking with the neutral scenario at the moment. All right. Hope you guys enjoyed that presentation. It was a little something. I'm going to flip it on to the camera here. This is me, and I hope you're still out there. Did you guys like that? 14K is a first. 14K for what, Ismail? Interesting. No one knows with 100% certainty. That's one thing you guys could know for sure. All right. All right. Let's start the questions now. I'll start with Rachel here. How far do you think the markets will drop? What do you look as far as that? You can compare the market percentage during the biggest crisis, any fundamentals, strong pivot levels. Rachel, when you ask questions of yourself and you say, how far do I think it's going to drop? It assumes that you know where the low is going to be. All right. The only way you ever know where a low is when you look at it in the past. You could always say, hey, the low was here. That's where I should have bought. In real time, you never know where the low is going to happen. That's called catching a falling knife. What you got to do is kind of move out of the way, let the knife drop, and then pick it up. So instead of trying to catch the low, stay on the short side, make the money to the downside until a time that you think, look, I've made too much on the downside, or I keep shorting and it's not working. That's your first indication that you're going to be going to the upside. So rather than waiting right now for that low moment to purchase it, jump on the short side and say, how much more can I make on the short side? And that way you'll live through that period and you'll know when the low is likely. You can't just say a level, like here's a level, because no one knows where it's going to be. Anyone who gives you a level that says this is going to be the low is just lying to themselves and you, right? So I guess the challenge is read it in real time. When we finally see the low, we'll know. We'll look back and say, hey, there was the low. We'll be paying a little bit higher because we're not getting the absolute low price, but we're paying for higher probability. Does that make sense? Buying just a cratering stock price is a great way to keep getting stopped out. And then when we do hit the low, now you're out of capital, then it'll turn. I hope that was helpful. Thanks, Bob. Appreciate it, brother. Um, let's see some of the questions. You're welcome, Lee. Uh, Awesome, Chris. I hope your three scenarios were pretty similar. I'd love to hear if they were a little different and how. I like to learn from you guys, right? And in real time, you see the whole picture. We don't really know which one of these threes are going to play out. I think everyone's looking for answers, and it's hard to get an answer. You'll have an answer when it's useless. Usually, by the time you know exactly why and what happened, it's too late to make money off of it. You got to kind of bring it back into the real time where there's still risk and take a shot at some point, right? I always tell the traders that they'll say, "What moved the market?" I'm like, "I don't know, but I'm long," or "I don't know, and I'm short." Let me get out, and then I'll read the news. It's more important to take opportunity in the real time than it is to make guesses, these big projections, and live and die by them, right? It's a very fickle market. I think the downside is not done yet. I don't think you have to blow out your whole portfolio. If you're long term, be long term. I have a retirement portfolio. I was long retail, a couple ETFs and bonds. So it's balanced out, but all in all, the portfolio is going to be down. I haven't even opened the chart. I don't really care to look at that portfolio because I got 20, 30 years to ride this thing out. That's money that I don't need. It's a long-term portfolio. I've parked it. It's a retirement portfolio, very small, and then the rest I'm day trading, and then I put money into real estate. All right. I'm interested in opening an account with AMP here in Canada. Do you happen to know what the requirements are? You just need money. Rock Outfitter. Send them your money and they'll open their account for you. There are no requirements. If you're not in British Columbia, you could do it. If you are in British Columbia, they're not going to accept your account application. You got to go to Iron Beam or another company, right? But you need money and that's it. They'll open it for you. If you're doing a corporate account, be prepared for a challenge. It's going to take you a while to get that approved. All right, and also be prepared for them to be super busy right now. If they're a little bit slower to get back to you, it's not their typical service, but this ain't your typical market either. Um, how would I, based on market activity, it would be a chop fest or consolidation? I have no idea, Lee. Um, I would have to look at the chart, right? Like these days, so much moves that by the time the day moves and it's gone, I don't know. I can't go back to that. Uh, Ask me next time. I have that forecast on the comments. I'd love to explain it to you, but it's probably the overnight range. Probably had a condensed or a narrower overnight high and overnight low, which puts an expectation for some consolidation. Hope that helps, bro. Any bounce on Monday? No clue, Greg. I'll tell you Monday at 4 p.m. I'm really terrible at forecasting markets. I'm great at riding them out, though, taking advantage of momentum. There's a lot between now and Monday that we could see. Um, the number one thing I think happens on Monday, we're going to try a new low. If we fail the new low, then yes, we're going to go up. But if we get a new low, no, absolutely not. We keep selling from here. So really look at the low levels and look at the transition points rather than trying to anticipate. Um, I think we keep going lower. I think even if there is a rebound, it gets sold. That's kind of how the traders that I'm talking to, and myself personally, are looking at it. Thoughts on the morning spread between equities and the 10-year Treasury? Um, Narrowing spread between equities and 10-year Treasury. Um, I don't know. See, here's the thing with treasuries. Treasuries right now are an interesting market, right? Interest rates have been cut, and the question about the bonds, because treasury prices are based on bond bids, right? And so here's the question with bonds: will people put money in bonds or will they stay in cash? And I think bonds are being sold off. Like think about this: market's going down, something has to go up, right? Other than Zoom, bonds are down, gold is down, silver is down, dollar just got hit as well on Friday. Dollar has been up last couple of days, but because there's a shortage of U.S. dollars, there's a liquidity problem, and when there's liquidity problems, dollars become more expensive. So you're seeing a cross-selling across all assets. People are just cashing out into dollars, which also creates demand for the dollar, which pushes it up. So um, I think any temporary correlation imbalances makes sense when you explain to yourself that cash right now is a king. That's where the money's trying to go to. Can I use order flow for forex trading? Joe Cad, you can use order flow for forex trading. You're going to have to apply the order flow on the currency futures, and based on those levels, map it out on your spot market. Or you could trade currency futures, whatever you prefer. Spot prices tend to be better though. But you could still use futures contracts to do order flow analysis, identify entry points, exits, trailing stops, etc., and then relay that into your spot trades. Will technology sector lead this recovery? It absolutely will. Bill, if we recover under the optimistic scenario, I think technology leads. All right, if we recover under the neutral scenario, which is a slow grind to the upside, I think they all take, they're all slow to recover. There's a bit of a slow rally across the board. I don't think technology is the weakest, but I don't think it's the strongest either. Oddly enough, I think it depends on how we recover, right? If businesses go bankrupt and then we get back online, you know, even retail might be a stronger recovery point at that point because new businesses come in, new money piles in, and there's a pop. Under optimistic scenario, technology for sure. Under neutral and the really dark scenario, I don't think tech has as much of a role in the next rebound. All right. I think if you're hungry as heck and you don't have a job, I think the last thing you're thinking about is getting an Android phone. right? Or when am I gonna get a new iPhone? But who knows? It does have a cult-like following. Um, when the markets drop like this, you hedge your long-term portfolio, selling naked calls. Rock, I don't have a long-term portfolio other than my retirement money, which I'm gonna be honest with you guys is smaller than you're probably thinking because I worked at the corporate world for probably 5 or 6 years. Um, so that's my retirement money. I haven't put a penny of that in my own. That's company generated money. It's like a locked in account. So I'm gonna see that when I'm 72, I think, is when I get to unlock it. Like that, I'm just kicking that down the road. I don't really care. I don't defend that portfolio at all. What I'm doing in the meantime is day trading. So to me, I don't have a long-term portfolio. Day trade, money goes into real estate. What do you think the economic fallout of Europe will be? Um, Jamie, I think he's gonna be bad, man. I think Europe is getting hammered worse with this Corona situation, and I think it's easy to say that now, but if you look at where the U.S. is in the early stage of where Italy was, the curve is nearly identical. So U.S. is on track to repeat an Italy style event, which is scary. All right, that's and all these countries that have just gone there recently are on an Italy type curve. So I don't know. It's too early to say that, but I think in Europe there's going to be quite a big uh, downside event as well. If you look at the scenarios, I think Europe is in the low neutral, close to the darker side of this scenario at this moment. All right, and you see people in Germany having Corona parties and stuff like that, not taking it serious. It's just going to exasperate the problem. I think the one thing that we're going to look back on is that we should have probably taken this a bit seriously, more serious earlier. So I'm new to trading and I haven't bought any stocks yet since I'm waiting to see the bottom. But I hear that day trading is really good right now. Should I try that out as a new trader? Ismail, rather than going to what you're hearing is working, reevaluate it from what works with your agenda. Right? Instead of chasing the sexy things, go for the reliable things, right? It's good advice overall. So, yeah, day trading right now is sexy, but if you don't have the time to day trade, then maybe the longer term approach is better for you. Ask yourself, what are you committed to doing? And whatever you're committed to doing is the best option for you. Day trading, absolutely right now, there's more profit potential. Because if you're looking to build a portfolio, most people start out their portfolio journey by looking to buy stocks. And that's just really one small part of the whole picture. You could be short selling stocks, which I don't necessarily recommend, but you could be buying puts. All right, you could be doing put spreads. You could be doing a number of things to hedge out some of that risk, and you get a little bit more advanced as you go through this learning journey. But I would recommend to you, if you have the time to commit, the good thing about day trading is it's 2 hours a day, 9 to 11 a.m. These days you could trade a little bit longer. In 2 hours, you start with cash, hopefully end with more cash. Most days you do, some days you don't, right? And have made money and go to sleep without a single worry because you know tomorrow it's a new day, new opportunity. Where the market goes is irrelevant to you. As an investor, that you're building a long-term portfolio, it matters where the market goes. And you have to be buying. It's a little bit more stressful to be buying something and the next day it's down 20%. You buy some more now, it's down 10%, waiting for it to average out and bounce back. If you're going to go in the investment route, I would tell you look at ETFs. Don't look to stock pick. Stock picking is very dangerous. One stock could go bankrupt. All right. People will say, well, look at Apple. Every time you bought the dip, it worked. Look at Enron. All right, go look at that company. Try buying the dip there. Guarantee you, no matter where you start buying the dip, it ends up being zero because the company went bankrupt. All right, so ask yourself, what style do I want to take? Am I building a long-term thing here, or do I want to take advantage of this for cash flow in the short term? And depending on where you want to go, day trading cash flow, long-term portfolios, more like investing for far out, wider horizon. All right. Ideally, you'd want to do both, to be honest with you. If you're a good day trader, you become a good investor. Makes sense? You need to be a good investor at some point. You got money, you got to do something with it. Um, Making through the questions here. This dollar spike will reduce drastically. What blog news do you read about the economy? I watch Real Vision all the time. Any recommendation for a great spot and options broker in UK? Dimitri, Interactive Brokers is a fantastic platform. I recommend it. I use it myself. In terms of blogs or news, um, Zero Hedge is one that I like. You have to remember though, Zero Hedge is a very scary place. The world is always ending tomorrow. and then the next morning they tell you why the world didn't end yesterday, but why it will end today. So it's a more scary place. What I like about it is the charts and some more alternative reporting and analysis. Other news sources like Wall Street Journal for their journalism pieces, fantastic. I also like Bloomberg for market information. All right, they do great circulars on a daily basis, morning, 5 things to start your day, evening. I like Seeking Alpha. Their Wall Street breakfast is great. And more than anything else, I like News Squawk. It's a paid News Squawk service. Our TradePro members get it discounted, severely discounted, right? But retail, it's about $300 at the moment, US. But they give you real-time news events, all right, news calendars, a whole bunch of emails with reports, and they read out the news for you. So if Donald Trump says, I'm going to slap tariffs on China, instead of reading Donald Trump puts tariffs on China, then going on your computer and trying to put the trade in, you listen to it in your ear. It says Donald Trump announced tariffs on China. Boom, you get into the trade. Uh, that's what I rely on the most. Let's see. This dollar spike. Wait, do you feel that the bull markets begin out of continued pessimistic during a bear market? Craig, I think that the bull market begins when everyone who is gonna sell has already sold. Right? I think there's still people hanging on. Right, the people who have said, I remember '08, eventually it'll come back. I remember '01, eventually it'll come back. Um, when those people sell in panic, that's when the bull market begins. The bull market begins when anyone who is gonna sell with a certain degree of fear has already sold. There are no more people willing to sell. Right? That's when we transition back to the upside. I don't think we hit that capitulation yet, the despondency part of the investor curve. Mark and I are doing an episode on this in our Mind Over Markets podcast this week coming up. We're going to talk about that, the investor curve, where we think we are and what we need to see for that to rebound. But I don't think we're near the despondency part yet because this drop happened so fast. I think some people who wanted to get out haven't gotten out and are still holding. Does that make sense? I think there's a little bit more downside unless we hit the optimistic scenario and things cases decrease, the government throws a lot of money at us, businesses start to reopen. Unless all that happens, I don't think the bottom's in. Okay, I think there's more. This dollar now I'm on this one, Ismail. This dollar spikes will reduce drastically U.S. exports, so it'll contribute to more downside. Um, Ismail, yes. So that's your traditional economics, right? Traditional economics doesn't have a model for coronavirus. So a high dollar, yes, there's going to be less exports. But people around the country right now aren't trying to import items. They're trying to just survive at this moment, right? So no matter what the dollar's valuation is at the moment, I don't think imports or exports are impacted at this very moment, right? It's more protectionism. Hey, we're all going local. Let's buy stuff local because I don't want to import stuff. I'm not thinking about Rolexes, AMGs, Mercedes, all that stuff. I'm thinking about food. Let me be safe in my family and let me hoard my cash in case this thing gets worse. So I don't think there's that much demand for exports, anyways. And so the strong dollar right now is driven by two things and two things only. Number one, huge demand from people who are selling equities. You sell equity, you sell gold, you sell oil. What do you get in return? Dollars. Right? People always forget about the cash part of the transaction. But I sold my equities. Great. What do you have now? Well, no equities. Yes, but you also have dollars. Right? You have cash. And so with people converting the cash puts a demand on the dollar. All right? That's the most important. Secondarily, people internationally that are afraid put money into the dollar as a safe haven status. And all these people causing a demand for the dollar creates a shortage of it at the banks. Hence why the Fed's throwing trillions of dollars in reverse repos and lending it to them. All right. Um, in September, when repo rates or overnight Fed rates jumped to 10% plus, 10% to borrow on an annualized basis. Think about that. It was caused by a massive shortage of liquidity and primarily U.S. dollars. I think this dollar could continue to go up a little bit more, and then at one point it'll bottom out or it'll top out and start to drop as well. All right. AMP increased their margin to day trading to 10,660. Do you think they'll drop it back down to 400 anytime soon? Surrendra, no, they shouldn't drop it at $400. I think what AMP is doing is fantastic. I think they need to raise margins in order for people who want to trade large that have to have a larger account balance. So what I would tell you instead is, rather than wait for them to drop it to 400, I would advise you to go to the micro, right? Because think about this: with one mini, if you make 10 points on the S&P 500, how much is that? $500, right? How many points do you need to make $500 with the micro? And when you do the math, you're going to realize it's 10 times more. All right, you need 50 points. So here's the thing that it boils down to is, when markets move fast, you have to be trading smaller size. And if you have to trade smaller than 1 ES, which is $9,000 of capital, you flip down to the micro, which is $900 of capital. So you scale down, and AMP forces you to do that. Retail traders think that professional traders trade big size when markets move fast. Incorrect. The bigger size you have, the less likely you are to get filled with these crazy thin volume conditions. So what pro traders do is they'll scale down, they'll trade less contracts and make up for that fact and still hit the same profit targets because it moves more. All right. So you're going to be getting more points with lower size. So I don't think AMP will drop it to 400 until we bottom out. All right. I think at this point they shouldn't. They're afraid. And at one point, if you blow out your account on some crazy event that gaps 40 points, um, they're the ones who are going to take the L. Right? And for me, who has money with AMP, I hope they don't drop it yet. All right? It's still kind of the wild, wild west. Make sense? Hope that helps, brother. With increased volatility, what's your preferred day trading chart on ES? What do you mean, Richard? Like time frame wise? Um, I don't use time frame charts, Richard. I I trade with range charts because time is irrelevant. Trades is what's important. I want to see the chart only move when there's trades. It's kind of like a gas pedal. If somebody's not hitting the gas pedal, why does it matter where the car is 5 minutes from now? It's going to be the same place, not moving. So I use range and price based charts, even volume based charts before time. I don't have a single time chart in my setup. But I do use a 10 tick range chart for shorter term, and I use 24 tick, which is 6 point range. So you need a 6 point movement for a new candle to print. And if you strip the time out of your trading, it becomes a lot more trendy. You see the trend a lot cleaner. Time gives you a lot of like chop. That's a great question. Self-managing while trading. What are some of your daily practices before during trading session to help you keep yourself in check? What's your thought on this? I don't know if you guys heard this. A massive prop firm just went bankrupt on Friday. It's called Ronin Capital. Right? They blew out on VIX trades. CME closed them out and liquidated their portfolio during an auction process. So, and if you look at Ronin Capital's about page, they literally say risk management is their number one bread and butter. Let me get a drink of water. Hang on. And now some tea. And now some water again. All right, I'm hydrated. Uh, so Ronin Capital blew out, and they're professional firms, been around forever. So in situations like this, Virillo, what I do is I make sure that I scale appropriately. There's nothing you could do that'll blow out your account faster than trying to overtrade in size than what you're comfortable with and what the market is providing you. There's always two things. It's the size that you need to do because of your comfort and experience level, and it's the size the market dictates. And if you overstep any one of those and you try to size up bigger because you get greedy, you're going to blow out at some point, especially with these kind of movements. So what I'm doing is I'm keeping it small. All right, I'm keeping it small in terms of I'm not out here trying to be a superhero. I'm trying to survive. There's a saying in the business: there are old traders and there are bold traders, but there are no old and bold traders. And I want to do this forever. And so I'm going to do this forever. This is a high opportunity event, high volatility, so I need to scale down. So I've sized down significantly from what I used to trade, but because there's more point movements, the profit potential is much greater than before. Right? So that's my biggest advice to you is scale down. 100%. All right, follow your rules, limit your trades. You think that in these environments you're going to say more trades, more size, let's go. That's not how the pros do it, right? You know that. It's more for other people than you because you asked the question so well that I know you're thinking about it. Is you got to actually strip it down. make things smaller. All right, reduce stress. There is going to be opportunity, but you don't have to be out there being a superhero. The people who are being superhero who are posting those profits on Instagram, watch for them 2, 3 years from now. We'll see if they're still around. All right. Um, oh, thanks, Ismail. You notice we're at 30,000 on YouTube. Oh, I'm so happy to celebrate this moment with you guys. We hit 30,000. It's a blessing. Thank you guys. It's all because of you. Thank you for being part of a community. So we love to do these kind of events for our members because we appreciate you so much. Will the coronavirus end up creating negative effects on rotten avocado feces fetish communities? I have no clue what that means. I think you tried to be funny and maybe missed the mark a little bit. It happens to me too. It happens to me too. Lee, your personal opinion. Do you put a lot of value in the opinions of Daniel DiMartino? I don't. Jeffrey Goonlock on bonds. I watch them often and they seem very sharp on the market. I don't really listen to other people's opinions, Lee. I know it's really terrible to tell you that as you're asking mine. Um, but I don't really look. If I follow somebody else's opinion, I might as well give them my money, right? I'm pretty sure they're really be willing to accept it. I read a lot of stuff, but I also like to, if I read an article, I like to find the counter article to that. You know what I'm saying by that? Somebody say, this is why the market's going to rally. All right, now let me offset it with this why the market's going to drop. Find that the more I delve into any one person's model, the more I start to emulate it. And if I emulate somebody's model rather than running it through my own filters and creating my own analysis with different pieces, right? If I emulate someone else's model, when I lose or make money, it doesn't feel like it's mine. You know what I mean? If I make it, I feel like, well, I'm just getting lucky here. And if I lose it, I'm blaming other people other than myself. So I don't really subscribe to too many theories. Honestly, I don't follow any one person without running it through my own filter, if you will. Does that make sense? I mean, Ray Dalio was a dude that I've read all his stuff, but I think Ray's wrong in a lot of respects, you know. And so what I like to do is find multiple people, pick pieces apart, and then look at real-time data. I don't like to get a theory without seeing any support from a real-time mechanism. I hope you know what I'm saying by that. Maybe I'm just losing you. Maybe I'm just losing myself at this point. I've been quarantined for like a week. Remember that. Do you have any videos on getting over fear of trading? I kick ass in the simulator, but really get nervous going live. Greg, that's a common thing, brother. You know, I would say get out of the simulator. Um, you know, if you're gonna fly a plane at some point, have you ever thought about this? I used to play flight sim games, and I actually found it funny because I would program a simulator's computer to fly the plane for me. So I was simulating a simulation. Funny enough, right? But anywho, when you're sim trading, there's no real risk, and your unconscious mind knows that. It knows that no matter what you're doing, you're just having fun with it. So the best way to work through this is to just go live, and go live smaller. With the S&P 500 now, you have the micros. You could trade less. All right, so trade smaller size, go into live trading, and have a risk management strategy. You have something on a piece of paper where it tells you what to do when something happens, how much your stops are going to be, how you're going to trail them. You know, you got to have a strategy, and you got to go live. The longer you spend on sim, the worse habits you actually develop. I know they say practice makes perfect, but practice makes permanent. The thing about sim is you get away with bad habits that on live are going to cost you money. And so that would be my advice to you is accept the risk. There is something we have though, Greg, because you asked me. I'm not answering your question technically. We have a podcast, Mind Over Markets. Greg, you should definitely check. One of them is how to deal with the fear of loss in trading, and we literally lay out neurolinguistic programming, NLP-based techniques to help you do it. All right, and it's one of the favorites for our traders. So check it out. It's called Mind Over Markets. You can go marketmind.online or go to your podcasting platform, type in Market Mind. Mind Over Markets is the podcast name. Or another route, podcast.tradeproacademy.com. Just speaking that out makes me feel like we should make it more simple somehow. Um, yeah. uh, you know what I really do follow though? Richard Duncan. Like I don't follow him, but I love his research. If you go richardduncan.com, richardduncaneconomics.com, he does great economic pieces. Like for example, last week this time he sent out a video calling for massive stimulus program. Well, if GDP in the United States 16 trillion, I think, something around that nature, said do 100% of GDP, risk a whole year of gross domestic product output and dump that into monetary and fiscal policy. And the way he laid out the plan was spot on. And then you're like, that's not going to happen. That's absolutely nuts. And now, you hear today, Larry Summers, not today, but on Friday, he's saying the new stimulus package is going to be 10% of GDP. If we're at 10% now, eventually we'll get to 100. Where what Richard Duncan's saying is announce a massive program now. The market will rip on it, all right? Or you're at least going to hold out the bottom. It's not going to keep dropping. And you're not even going to need all of it because it's going to catch people off guard so much. Like, wow, this is great. I'm going to keep my business open and the government's got my back. But the more you see the government get involved, the less it becomes a free market. You know, anyone who thinks that today's economy is a free market is missing a large piece of what's really going on here, especially since '08 or '09. I think the free market really died out in '01 because since then the Fed started to meddle into the market a little bit more heavily and certainly died out as of '08. Right, it's not really free anymore. The free money from the Fed, but this whole free market principle, government's really putting their hand in the pot of that philosophy. Right? It's very interesting. This is more philosophical. I don't want to get there. I'm going to be here for 7 hours if I go there. You guys enjoying this Q&A session so far? Been going for about an hour. Damn, time flies when you're having fun. Right, Reese? She fell asleep. The wife fell asleep. What should we be looking out for in the week ahead? My opinion of Top Step Trader. Michael, my opinion of Top Step Trader is this. We're partners with Top Step Trader. By the way, you got to remember, if you want to be funded as a proprietary trader, we usually say go to Top Step Trader. Here's my opinion of Top Step Trader. Okay, stop me because this could become a really big rant. They're phenomenal. They will give you money. If you hit what they're asking for, they will give you money. If you hit the criteria they're asking for, you're trading very well, very disciplined. If you screw up their combine, you have to pay $100 to reset the test, if you will. So if you reset the test 10 times, it's $1,000 that you paid for the opportunity to be funded. All right, and with that $1,000, you could trade one lot. You could trade 20 micro contracts, right? So what I'm saying is, if you're going to go the funded trader route, remember that you got to set yourself 4 or 5 maximum resets. I'm going to spend $500 trying to qualify. And if I can't get it, I've already wasted one contract. Because any prop firm, not TopStep in particular, but any prop firm out there who says, I'm going to give you $50,000 capital in your account, and then they say, but you can only trade 5 contracts. You gotta look at that and say, do you think they have $50,000 in their control account to give you 5 lots? You gotta be nuts, right? They'll give you 400 of margin and have about $2,000 that they actually have to put down of cash for this $50,000 advertised account. So they're phenomenal. Getting funded as a prop trader is great. Some considerations to make. How much money you're willing to spend to get funded? That is direct funds to fund yourself for 100%. You don't have to give up any of your profit split. Number two, it's going to cost you about $500 to $600 a month, just to your operating costs. Because now you're no longer individual. Now you're a professional trader because you're trading someone else's money. When you trade OPM, not opium, but OPM, other people's money, you're considered a professional. Once you're professional, your exchange data goes up and everything else. All right, something to consider. I love Top Step though. They're honest guys, they're straight shooters, and they will fund you if you meet their criteria. All right. Is 50% ROI over 2 weeks just quick scalping using just price action on 1 in 5 minutes sustainable, or was I just lucky after 1 year of trading? What do you think, Marzina? And what is 50%? All right, if 50% ROI on 2 grand is the case, or 50% on 10 mil, there's scale that we got to talk about as well, right? So 50% in 2 weeks is not luck. Look at the market, right? If you think about when has these market conditions happened in the past? '08, '01, '87, early '90s as well. So 4 times in the last 30 years, right? So it's not luck. All right, you've done it. Just as long as you're not doing anything crazy. What does crazy sound like? Uh, Getting long, being down 500 bucks, adding more money to get long more. Keep adding, adding, adding until you break even and you risk 2,000 to make 100 bucks. If you made 50% doing that, when the market reverts to less volatility, it's going to be a blowout, right? But if you're following good risk management criteria, if you're planning the trades, there's discipline behind it, then no, absolutely not. I think that's fantastic. I'm proud of you for doing that because these are the conditions that will lead to that, right? So I say believe in yourself. You did this result, and as long as you're doing it methodically, then hoorah! What is that? And I love to see our trade pro LaFems go out there and crush it. So, but right? Only you know the truth. If you're getting a little bit loose with the rules, taking a little bit risk out of place, you're risking more on a dollar base than you're getting a return, then be careful. It might be a little bit of luck. All right, but you know what? We're in a luck kind of business. Luck will help you some days. It's not all about luck, but some days, I'll give you an example of luck on the other side. The Fed did a surprise 50 basis point cut on March 3rd. I was long S&P 500 futures, and literally, I'm on the mouse. All right, I have my take profit. I'm on the mouse to cancel the take profit, but I'm like, you know what? I'm gonna scratch this trade. I want to get paid. The market was kind of near a top. It had been selling off. It went up. It was a little bit of a fade. So I'm like, you know what? Screw it. Flatten the button. Literally 3 seconds later, flatten. 1, 2, 3. The squawk comes on in my ear. Federal Reserve emergency cut 50 basis points. Just skyrockets. I'm like, you gotta be kidding me. If I would have held it for 3 seconds, I would have fluked my way into a couple grand in just moments. At least a couple grand in moments. Those moments you gotta laugh about though. Right? That's luck. Sometimes it helps, sometimes it doesn't. Um, you guys use bookmap? We do, Jamie. We use a heat map style, but not bookmap in particular. But we do use a heat map for limit orders. Absolutely. That's a big part of our strategy. We follow inventory. Great question. Um, Love that falter. Greg, that's really good advice from the falter guy. Really good thing he's told you. This associating myself with the dollar helps the most. Money means nothing. Uh, you got to remember the problem with trading is that the money is the job. Right? Not many people have worked a job where it's the money. Right? Most people work a job, and for the job they're paid the money. But the money is the job in this business. And so you gotta detach from the fact that what you're doing is risky or what you're doing is money. Stop going for a certain profit amount and focus on the job. The job creates the money. All right? You're not trying to create the money, you're trying to do the job. Do the job, do the trade. Always focus on the next best trade, whether you're up or down. Like what do professional athletes do? If you're down 4-0, do you think that the athlete goes out and the whole time is looking up at the scoreboard? Oh man, I'm going to be down. What they say is, I'm down 4-0. It's my responsibility to change it. How do I change it? The next play. All that matters is the next trade. That's all you got. All right? You can think till the cows come home or till you're blue in the face, but it ain't going to change the fact that no matter what you do, whether you're going to have a successful career or not, it all starts with the next trade. Just bring the focus to that one thing. Always focus on the next trade. You lose perspective of the money. The money is the reward. It only matters at the end of the day. Make sense? If you think about it, any profit or loss you have now doesn't mean anything for the future. It means what you've done in the past has generated that result. What you're going to do tomorrow is going to generate the result in the future. So when people statistically backtest things, fantastic. All right, but don't get too much confidence over that. It's pretty irrelevant. Um, all right, I think how grotesquely behind am I in questions? All right, I need to hydrate again. How are you guys enjoying this so far? All right. Hey, Scalp Houston, thank you, sir. Really appreciate that. Uh, do we have a toilet paper issue in Canada? I don't know. I don't use toilet paper. Just kidding. We don't. We did at one point. People freaked out and bought all of it, and then they realized, oh hey, what am I going to do with this toilet paper for like 7 years that I've accumulated? And so those people aren't buying it as much anymore. You can get it. They restock it if you go in the morning. We're not having like a shortage. I saw a really cool video of a person that bought paper towel and he cut it into two. I think you showed me that, Reese. Um, Greg, I'm going to assume that after those 7 winners, you started to feel like, hey, the market's moving because I'm clicking the mouse, right? You're like, I'm this thing's daddy. I and I'm willing to bet that your trade that led to the screw up in the close wasn't the same size or style as the other 7 that made you the money. You just got a little bit greedy, right? And be honest, I do that too. I get greedy. I relearn lessons so often that you'd think I'm just the most hard-headed person in the world. Like, this is the business. We're never going to be perfect. We're always relearning lessons in different ways. Every day the market's different, therefore every day you're going to learn the same lessons in a different way, right? And that's the fun of it, and that's what excites me. I'm an options. I'm going to go a little bit quicker, guys. I'm an options day trader. These premiums are jacked up. I never really got the chance to understand anything else because I was focused on learning options. Rachel, keep it going with options. I think there's a lot of opportunity. And if you want to learn day trading, Rachel, there's this place called TRADEPRO Academy. I don't know if you've heard about that. Not only has the education, I think the education to me is like the least relevant part. It's what people want the most, but I think it's the least relevant part to success. More importantly, we have the community. So you're gonna be able to come in here and meet people who do this successfully, work with them, learn from them, and be able to teach other people who know less, believe it or not. Rachel, you might have never done anything about day trading, but what you've learned in options transfers over to day trading, at least to some extent. All right, so come on out, check it out, and I'll tell you guys a little bit more in a second. What do you see the current event would have on the real estate market? If we have the pessimistic scenario, real estate markets drop 30 to 40%. Neutral, 10. Uh, Optimistic, they won't really budge too much. Key markets to have a lot of like Toronto, Vancouver, New York, California, San Fran, Australia, thinking of other markets, the hubs where there's a lot of demand and a lot of people, I think they'll be sheltered more than other places. All right. But we don't know. Who knows? Honestly, I'm staying long and strong for the whole time through my real estate transactions. The only thing about real estate is I just want more. I, that's how it goes. It's a longer term game. Uh, I've been trading Forex for 2 years, but I'm attracted to trading futures because of order flow input. Uh, Joe Cad, that's amazing. You're at the right place, man. Your order flow puts so much more probability in your pocket for trading opportunities, right? With FX, FX is a transaction market. A lot of people start with it because everyone sort of teaches it, and that's the first place you probably saw somebody drive a Ferrari and say, this is FX money. But the thing with FX is transactional. If a bank wants to sell 100 million US to buy the equivalent in euro, all right, doesn't matter whether you're long or short based on the head and shoulders pattern, you're going to get ripped apart if you're on the wrong side of it. You get stopped out and it goes the other way. So it's more of a transactional liquidity market. Futures is where a lot of professional traders at firms, cut their teeth. So I think that's a good call. All right, let's cut it off here if you guys don't mind. I'm going to finish these last questions, and then the last one in here, holy crap, it'll take forever, is ST. ST, we're going to end it with your question. Appreciate you guys. George, daily range for ES, so why do you scalp 8 ticks? No, Surendra, I trade. Um, Michael, that's awesome that you're funded with Top Step. How was that journey? Did they increase your margin as well, or are they giving you the 5 lots that they promised? I use 15 tick, 12 tick stop now, 15 tick take profit initial, and then I move as it goes. I noticed the crude oil futures move in easier fashion. Yeah, Ismail, crude oil futures, we trade them in our daily room every day as well. They do move a little bit more trendy with less volatility, and so we take advantage of them when S&P is just so wild. But right now, we don't trade S&P sometimes because it just moves too much. When there's like limit downs first 20 minutes, it's like let that thing sort itself out, then I'll jump on board. That's the time we go on oil. A couple months ago, we used to go on oil when S&P was too slow. So oil is a great, consistent market. We trade it every morning in our room. All right, Greg, no problem, brother. Take care. Louise, drop the question in here. I'd love to be able to help you here, brother, man. Newbie, how can you tell if you're paying a premium for an option, fair value versus expensive? Newbie, oh my gosh. Uh, I can do a whole rant on this. There's a whole industry built behind it. Whatever somebody's willing to pay for it is the fair value. There is no such thing as what fair value. It's just a concept. Whatever you could push it on the market for is the fair value at the moment. That's just my belief. You can never really tell. You don't know that kind of thing. Uh, all right, Marzena, you're gonna want to put a plan together. All right, the plan is gonna be what gets you the next 50, 100%, etc. Just trust me. Put a plan together of what you've been doing that's consistent, and not the intuition's not a good tool, but intuition alone is not a plan. Does that make sense? I'm just trying to have your back, girl. I'm not trying to. I'm happy for what you've accomplished, 100%, but I just want to give you the foundation for more in the future. All right, Michael, not a problem, brother. East Village Bird Nerd. I can't speak on it. I have info, but I can't. I really can't go deeper into Ronin Capital. You'll hear more about it. All right. Your broker is not affected by this. These guys are a proprietary firm. All the money that was lost is money that was put in by private equity. All right. No people, no humans were harmed in the loss of this capital, other than the people trading it and the people whose money it is. But it's not public money. It's closed off. It's private. Um, Rock Outfitter, we are using Denali. We're switching to it at the moment. We're going through that process at the moment with TT routing. Yeah, we waited for Sierra to figure out what the heck they wanted to do before we started doing it. All right, Thiago, thank you. Gavin, for sure. As long as you're trading small, it's a great time to go live. Don't overtrade your capability because you're new. You're gonna have to go smaller. When you get tempted to go bigger, that's your greed kicking in. Be careful. Suppress that. All right. Um, that's awesome. Great, guys. Appreciate you being here and participating. I gave you my all. I'm all out of energy though. Uh, it's in quarantine environment. But here's what we do at TradePro Academy. We do education. Education is the first step. Right? Our education platform is not $50,000. It could be. I've heard a lot of people tell me it should be, but it's not. So at the end of the day, you're not going to learn from the education. Right? It's ridiculous to expect that you're going to take a course and you're going to go out there and start making money. What you are going to learn from is the market. And so if somebody could guide you through that process, you're going to learn a ton. And our education gets you started. It's top of the, it's top notch. I've had proprietary firms ask me question about their development model. One of them was mentioned in this webinar today. I can't mention names though, but one of them, we mentioned a few. All right, and so the education is top notch. That's undeniable. But in addition to that, what you're doing is you're going in the room and you're giving yourself a chance to succeed with the community. We trade 9 to 11 a.m. every morning. Actually, 9 till 12 for the elite members. We have a trading psychology course based on neurolinguistic programming. So if you ever have a fear of loss of trading, all right, you have lack of confidence in yourself in what you're doing, all right, anything that's psychologically going on in the background will magnify itself in your result. So this course will help you kind of address that before you even start. The people who've traded live have told us one of the biggest benefits, believe it or not, is that NLP trading course. All right, I didn't ever think that'd be the case, but that is the case. All right, we have a daily trading room. We have a community where people talk with one another. We do elite webinars on a monthly basis. This little clip that I showed you was from the elite webinar. We had more slides. We went in more depth discussion. All right, check us out. On the best part of all this is that it's on a monthly basis. It's value priced, and it's the cheapest you're ever going to pay for this quality of education. All right, you're going to have to go to a prop firm to get this quality of education. In addition to that, it comes with a 14-day money-back guarantee. It's the only time you're going to have a risk-free trade in this market. So I appreciate you guys. Thank you for being here. I got to tell you, I love you all. Thank you for, especially because we just hit 30,000 together while we were live. That's a special moment to me. And I got to tell you this, in 2008, when I was taking those phone calls, you know, I had people tell me some dark stories about the amount of money they lost in the market and what they were going to do next. And when this started to happen, back then I told myself I got to commit. I got to help these people. I was writing a blog as the markets are tanking in '08, saying why people shouldn't be long, saying what options to get. I was a lot more involved, and nobody was listening. I'd go in the morning, I'd still take those calls. Massive losses of the portfolio. People have worked for that for decades to save. And when I left, I said I'm going to start a business to educate people. I hope to God I never have to do it again the way it was in '08. Here we are. All right, this is almost an '08 like recurrence. And just being able to see you guys ask these great questions and hear some of your successes, honestly, like validates the last 10 years of what I've been doing. So to me, it's a very special moment, and I love to see you guys win. But let's be humble as well. Right? There's a lot of people out there still getting hurt, and my work will never be done. I'll do this to the day that I can. All right, love you guys. Thank you for being here. Thanks for celebrating the 30,000. Send you love, joy, and happiness. Hope you've enjoyed some of this insight. I was honest. I was real with you all. Anything you asked. And the biggest thing of all is I believe in you. Right? No matter what you believe, I believe that you could do this. How do I believe that? How can I say it with confidence? I see it being done by people every day in our community. All right. Sign up. We'll see you guys there. All right. There's no conditions, no contracts, month to month. If you hate it, give your money back and we'll move on with our life. Take care. Love you all. Thanks for being patient with me through these tech difficulties. Have a great rest of your day. Be safe. And I send love, joy, and happiness to you and your beautiful families. Be safe. I'll see you guys on Monday at 9 a.m. Take care. Ciao. Now I got to figure out how to turn this off. Thanks, Francisco. Appreciate you, brother. I gotta send the love back. This is great. I need to wipe my tears with my wife's laptop bag. But in all honesty, appreciate you guys. Adios. Ciao. Thanks for tuning in.